Hi everyone, it's Paul Lange from DTS and I want to introduce you to what you're about to watch. It is an hour-long event that was presented live to the free members at Discipline Trading Strategies. It's called Learning from the Internet, and it's taking an honest look at what the Internet has to offer in terms of useful information to traders and wannabe traders who are learning. I think you'll enjoy this. As always, if you have any questions, feel free to email me. I'm paul@disciplinetradingstrategies.com. If you enjoy this, check out the many other educational videos, articles, and Trade of the Week videos. You can get access to all those at the DTS Free Stuff page. Just find that on the DTS homepage. Anyone's welcome to view those. So for now, sit back and enjoy this event. Good afternoon, everybody. It is exactly 5 o'clock on the East Coast of the United States and in many other places, I suppose. Let us begin. I am just a hair flustered. I normally have this surge of comments to say when I start an event, it just kind of naturally flows in my head. I'm a little frozen today. I'm not really sure why. Maybe I overthought this. Learning from the internet. What do you can learn? What do you can learn about trading from the internet? This is sent to you by email. I have nothing to add to that today. What I do want to say here, though, is let me go back to this slide here, is that this is not meant to be sarcastic. It's not meant to be anything except just factual. I just want to take us on a little journey through the internet, which is a great thing, and just kind of give you a real live look at what I think the usefulness may or may not be. Coming from the eyes of somebody who, has been around a while, has done this, has looked at stuff, that has been through it all, has a style, has worked with people, has trained people, and has had a lot of people come to him, and just has, like many of you out there, is probably have had your head lifted above a certain level and you just see things a little bit differently. As always, what I like to try and do when I discuss topics like this is not to just give you my opinion, though sometimes it may be that, and I'll try to let you know, but to factually prove to you where, you got to look around and say, hey, yeah, I mean, you're right, what am I doing? So with that, let's begin. The internet obviously is a great tool, and like great tools, it has a lot of pluses and minuses. There's a lot of big negatives to the internet for the world in general, but a lot of pluses to it. But in terms of us using it, there's a lot of great things you learn. I put two examples there, making a 383 stroker from a Chevy 350. Does anybody know what that means? Any car buffs out there? I used to like playing and working with cars, some muscle cars, and the reason I put that on there because I actually did that. My son, when he started driving, got himself an old Camaro, and he talked me into rebuilding the engine. And I used to play with cars, but I never rebuilt an engine. So we went on YouTube, and I had enough knowledge, and we went on YouTube, and we figured it out. And the car started, and it was fun. It was a great experience, great little father-son thing. And that was probably borderline, because you needed to know a few things, and we certainly could have screwed a lot of stuff up. But I had enough experience, so we got through that. Something simple like changing a toilet float. I think anybody without any experience, their toilet leaks, you can, hey, go on YouTube, and there's 85 million videos out there from different plumbers and whatever telling you how to change a toilet float. Great stuff. But how about when you get to the more complicated or the more artsy things? Years ago, I used this for an example. Can you learn to paint from the internet? What's that? You restored old German cars. Wow. Yeah, right. Yeah, I learned a lot. What do you think? Can you learn to paint from the internet? Give me your answer to that. Can you learn to paint from the internet? Because it's really, well, I don't want to say what I'm going to say or ruin it for you. Can you learn to paint from the internet? You can learn about painting. That's a great answer, actually. Yeah. Well, I think the answer is you'd have to say, well, Paul, what do you mean by learning to paint? Certainly, you can learn to paint from the internet, right? I can go learn to finger paint. I could draw stick figures. I can learn the techniques. But here's the question. In fact, I just happen to see how to draw the Mona Lisa. So somebody's going to teach you how to draw the Mona Lisa. Your brother-in-law did. That's great. But here's the question, and this is maybe, I didn't realize this till I put that Mona Lisa thing up. This is maybe right at the heart of the matter today. Could you learn to paint from the internet? Yeah, I guess you could. Could you sell those paintings and make extra income or make your living? Could you do that? Could the average person with no art skill draw a painting from the internet and sell it? What do you think? Do you think that's a yes? Could you make extra income drawing paintings, learning to draw from the internet? Could you do that? Years of practice and training? Perhaps. Yeah, perhaps. But at some point it's become kind of your practice and everything, right? In other words, there's a limit, right? There's a limit to some of these artsy things where, like somebody said, you can do the techniques but not the skill, right? Could you learn to defend a contract dispute against a big company? If you weren't an attorney, no legal background, could you learn to do that? Well, you could certainly learn some of your rights and you can learn some of the arguments, right? But when you go to court, you'd probably get blown away by a whole list of things that you didn't know existed. There's a little joke there, kind of funny, I thought it was. I put, okay, he broke a few laws, but do you know there are literally thousands of laws he completely and totally abided by? I thought it was kind of funny because that's almost what you might end up doing if you end up going to court for yourself. So let's get right into it. And I have 5 examples here that I want to go through. A couple are softer, 3 are technical. And when I got to the 5th one, I kind of stopped. I was going to actually do a lot more. And by the time I got through 4, I said, you know what? Point made. And when we get to this 5th one, I'm just going to look at it and say, come on. So I'm going to start with a very vague one here at first. And I didn't learn anything doing this about whether or not the internet is valuable for learning to trade, but I maybe learned a new way to teach a few concepts. So I thought it was interesting. Is technical analysis or fundamental analysis the better way to make money? What a great topic, right? I've said this before in some other events that if you go Google this, you will get a pretty standard answer. The debate between the importance of fundamental and technical analysis in investment decision making is long-standing and nuanced. Both approaches offer important perspectives and are more or less valuable in different contexts. Many investors and traders opt for a blended approach, leveraging the strengths of both. As it's often, I don't know what that means, pithily put, fundamental analysis provides insights into what to buy, while technical analysis tells you when to buy or sell. Ultimately, the choice depends on your trading style, investment horizon, and financial objectives. Thank you, Investopedia. How the market works. Technical analysts would criticize fundamental analysis as they consider it worthless because ... I didn't put the ... because it really doesn't matter. A fundamental analysis would say a technical analysis ignores ... And here's the key thing there. The bottom line is that you should do some reading for yourself and figure out which system you feel most comfortable with. Now, I'd like to encourage you, first of all, to go do this yourself. Go Google this. Go look it up. Go find the deep-seated answers. Do you know what my point is here? You may not, because I'm not even sure it hit me properly till I did this as a presentation, really. Yeah, I mean, this bottom line here, right? All of this information on the internet, all of these traders, all these things, all of this blah, blah, blah. And here's the bottom line. Well, you should figure it out for yourself. What does that tell you? See, something else I learned, I guess, as I got older is that there aren't many experts in the world, especially now with the internet. Anybody can write anything and put it out there, right? So who said this? I mean, there is a person who said this, who said whatever you write. And do they even know what they're talking about? I have to give AI some credit. Some of your internet searches now produce an AI answer up top. And I have to give AI some credit because AI is I have the word on here, is very politically correct. AI on a topic like this will never ever give an answer. It'll be just like this. It'll just be, well, some people think this, some people think this, blah, blah, blah. Let me give you what I'm going to have to initially call my opinion first, okay? There is no debate. There is no anything about what is the way to learn to trade for 99.99% of the people. That is technical analysis. There is no fundamental analysis concept. Some of you don't like hearing that, but it simply is the truth. Now, I didn't leave time in this presentation to do what I've done several times, is to kind of do the mockery of fundamental analysis. And when it's in the intro class, I just did that a week ago. When you hear it and you hear me talk about fundamental analysis, you have to walk away saying, yeah, he proved himself. There is no opinion, there is no right or wrong. And understand what I'm saying. I'm not an idiot. I'm not saying that there's not some indirect relationship between good companies, good numbers, and them going up. All I'm saying is that you stepping up to the market today, you'll never make a penny understanding fundamental analysis. Now, you can pretend you do, like I've said many times, in a bull market, you can go long because you like what the company does, because you like the guy running the company, because you like the PE ratio, or because you like the color of the logo. It really doesn't matter. The question comes in is what happens when the stock that you've always liked doesn't keep going up anymore, right? The fundamentals of a company won't look bad until when? If you're long a company and you're saying, all right, I'll get out when the fundamentals go bad, when are you going to get out? Anybody want to give me an approximate answer? The stock will be down like 50%. Yeah, it'll be, no, you're not going to get out. At the top, the fundamentals look fantastic, all right? And you're never going to go long a stock at the right time based on fundamentals. What we care about, and it's hard for people to get this, but what we care about is the people with bigger money, their perception of fundamentals. Okay. I started, in the 90s, and I started in the late 90s, but I still caught the end of this. Companies were skyrocketing higher with no fundamentals. They had no earnings whatsoever. It was all just on the house of cards that, well, they're going to make money someday soon, and when they do, it's going to be worth $1 billion. General Electric, Enron, the best fundamental companies in the world, and they just crashed, just completely crashed. And by the time, well, Enron, I mean, the fundamentals went bad in 1 hour, so that doesn't count. But GE was just a great fundamental company the whole time. It was falling. It went from 80 to 6. So I don't want to spend a whole lot more time on that discussion because it simply is a fact. And fundamental analysis today is like I've talked about before on that show called Billions, where there is, if you think you're going to go read the internet and read what a million other people have read and say that the million other people are wrong, that Amazon is not really worth 157.21, I don't know what it is, I don't have it up, it's really worth 159.21 because I just read the internet, you're insane. I hate to say it any other way, but you are insane. You saw that on golf balls. Hey, Hanos, they may be worth something, more than the company, at least anyhow. So you just can't do that. What fundamental analysis is today, and the reason I say that it's not for 99.99% of people, if you have a lot of money and you can hire people, teams of people to do independent research, like in the show Billions, they hired people that sit in this parking lot of this company to see what trucks are showing up, and they shorted the company that stopped showing up. I mean, that's fundamental research today. It has nothing to do with PE ratios and looking at the internet and all this stuff. And for a lot of these things, at some point, I have to say, you know what? If you don't believe me, that's fine. Someday you will. Why is this debate even promoted anymore? Well, here's the reason why. It's because and largely because of the financial shows. I call them just talk shows where they just have guests on and blah, blah, blah. Because that's where all the discussion can be, right? We can spend hours and hours and hours and hours talking about fundamentals and the economy and all this stuff. But the truth of it, none of it matters. If all that matters was learn how to read a chart, every show would be out of business, right? And as I've kind of just said in kind of a serious but funny tone before, the smartest, greatest person in the world on fundamentals would be Jim Cramer. And according to the internet, according to people that track him, he loses money so badly that there's a fund set up that actually takes the opposite of his trades. The topic tonight, I want to stay on topic, is learning from the internet. So the first question people may have is, well, how should I go about making money, fundamental or technical? From people who do it, from people who make money, from people who understand this, there is no question. Another, I think, a quasi example is that book Market Wizards that I talked about sometime where Jack Schwager goes out and he interviews 25 successful traders to try and duplicate what they do. Guess what? The 25 successful traders that he found were all technical traders. Nobody looked at fundamentals. Oh, here's the other point I want to make. Here's another reason, and this is one of these stupid circular self-promoting reasons, but the best reason I can do is give you an example. The company I was with a long time ago, we used to do some lip service to fundamentals. We used to put them in some things and talk about them. Every trader at the company laughed at that because, we're all decent technical traders at the minimum. And it was a joke, but why did the company insist on including, we will learn how to blend fundamentals with your technical training? Why was that a line? It was just a complete BS line. Why was that in there? Yeah, exactly, marketing. And it was said very clearly because too many people, right or wrong, believe in fundamentals. If you tell them that they're wrong, they're not going to come to you. I don't care. If you don't like me, get the heck out of here. That's fine. Go do what you want to do. I'm here to help people that want to learn. And I've said many times, you may not like me. That's okay. Go do what you're going to do. But I tell you like it is. And I always ask this last important question. If fundamentals make any difference at all, you know what? I would incorporate them. Why wouldn't I? Why would, if you think of me as just for some reason, some self-promoting person that wants to get somebody to sign up for a seminar program, you know what? I could say, hey, I'm going to teach you how to blend fundamentals. But I don't because it's garbage. It's complete, not just a waste of time, but it is actually counterproductive tremendously. So the first thing we look at the internet, it's not going to help us whatsoever. Oh, I put in, yeah, well, I kind of another example of what I was just talking about was The reason that the shows and stuff won't give a more, even the people that know, I mean, I think a lot of people on the financial shows are just talk show hosts. They really don't have a clue. I can tell by listening to them. They're just the talking points, blah, 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 interest rates, blah, 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 earnings, blah, blah, blah. And there are some people that are smarter on there. There's some people that know what they're doing, but they're not allowed to say anything because it's just kind of like the political thing today, right? If some company says, I hate I hate liberals or I hate conservatives, they just lost half their customer base. And don't no political comments. I'm just using it for an example. It's the same thing here. I mean, if somebody comes on and says, "Oh, fundamentals are garbage," well, they're going to lose half their audience, whether that's the right thing to do or not. I don't care if I lose half my audience. That's fine. Learn the right things. All right. So enough about this. Many of you already know this, but many of you here don't. And some of you are what I would call closet fundamentalists. You say, "Oh, no, no, I never would," and yet you're out reading all this garbage all the time. And finally, I guess the sweeping point is this, the last point is this, is that it's not that technicals ignore fundamentals. Technicals encompass fundamentals in a way that you make money from. They encompass fundamentals as to say, all right, here's all the stuff about the fundamentals. But the question is anybody buying it? The P is twice what it should be. Is that a problem? I don't know. I don't have a clue. Some stocks, the PE hits 30 and they come to hit a brick wall. Some stocks are at 90 and they still go higher. Well, what I care about is the people who are putting the money into the stocks. And I don't even care if they're right or wrong in the big, big picture. All I care is, are they going to move that stock up to where I am comfortable, to where I'm making money, to where I can manage it? Manage it. That's what it's all about. Let's move on. I'm glad I didn't get too long with it. Let's go on to a technical one. They justify a stock for right. Exactly. Yeah. Yeah, Jack. I mean, you sound like you're almost quoting me exactly, right? Stocks do what they do based on supply and demand, and then afterwards, the news has to come on and justify what happens. You got to be quoting me because that's almost a quote right from like many presentations that I do. But what's terrible is, Jag, is that makes naive people think, right, that, oh, wow, this guy knows what he's talking about. I mean, the stock just dropped, and look, he's right, it did this, or the economy just dropped because they said this, so it's the book-to-bill rate, I got to listen to stuff. So it gets confusing to new people. It's terrible. Let's go on to another one. Now, this is taken right from the internet here. How to use moving averages to make money. Well, everywhere you read, you're going to hear their support and resistance, which is garbage. Many places now say they can act as support, and I got to let that comment go. I don't like using the comment support because moving averages are not support. They are not support based on actual support. There's no concept of a previous buyer being in a moving average. But I didn't want to pick on that one because that's a little too cloudy. The way most places phrase it now, they kind of say, act as support. So, but here's a good one, right? Here's a way to make money. Crossovers, Investopedia, are one of the main moving average strategies. Did you know that, everybody? Are you aware of this? I've been a technical trader for like 25 years now, and I didn't know that. That's pretty impressive. I guess I've been in a closet the whole time. Crossovers are one of the main moving average strategies. It's a strategy, right? The first type is price crossover, which is when the price crosses above the moving average, signal potential change. I even read that one. There's another one, of course, in the moving averages cross, right? Here's my comments off to the side. You don't have to be very good at charts to see this is insane, how insane this is. Only a fool would fall for this. Now, why did I put only a fool would fall for this? Well, if you're just new and you're reading, you say, Paul, it's kind of harsh. But here's the thing. It's not like we're talking about the molecular structure of DNA where you can't prove or disprove it. We're talking about charts. You have, if you're learning to trade, you have 20,000 charts in front of you right now from, 500 stock symbols on 5 different time frames across the span of time, whatever you want to look at. So it's amazing that you still find this stuff. And I'm going to come back to this slide in a second here. For all these examples, you have to trust something. I'm glad I put these little reminders on the slides for me, or better, you prove it yourself. What is it that you have to trust? Here's what you have to trust. I'm going to go show you examples where this didn't work, right? But you may go home tonight and you may search and search and search. You may find examples where it did work. Well, of course you can find examples where it did work, just like I'm going to show you examples where it didn't. In this case, I can't say that I'm proving to you that it does not work because I'm showing you some examples of it not working, right? Do you follow what I'm saying? Just like you cannot prove to me that it does work because you found an example. What I'm asking you to trust me in is that I have been looking at this for years and eons, and people have tried to prove to me. And here's what I'm going to ask you. I'm going to throw it back to you. You think this works? You show me. You show me the moving averages and the time frames that you're looking at that this works to make you money. And when you show that to me, I'm going to pull up 10 random charts and it's not going to work. And then you're going to say, well, Paul, it worked yesterday on AVGO. I say, okay, but it's not going to work tomorrow on whatever chart you're going to pull up. So that makes it completely worthless, right? Completely. So let's just take a look at a chart. And I didn't go searching for one that didn't work. What I simply did was I took the QQQ yesterday, because I got these slides yesterday before. That's yesterday, right? 9:10. So there's yesterday. Now I started with a 5-minute chart in the 20 and the 40. So the moving average crossover, I guess you'd be going long, right there, because there's the crossover, the 20 crossing the 40. So you'd be long up there. So that wouldn't have been very good. You would have shorted, you would have shorted the exact low of the day to the penny. And then you would have been long right there and you would have made a little bit of money long. Now you're gonna say, well, Paul, okay, you're a 5-minute chart. Let's go to a faster time frame. Okay, let's go to a 2-minute chart. Here's a 2-minute chart. I compressed it down so you can just kind of see. So a 2-minute chart, our first signal would be here. You'd be shorting right there. That would have made a little money. Okay, that would have been, there you go. And then you'd be going long at the high, at the exact high you'd be going long. So there's a total failure. And then you'd be going long here, which, yeah, it came back. But I mean, that is like the worst entry in history, and you're not likely going to do that. Now, the point here again is that you're not going to ever make money doing this. And you can start telling me, oh, Paul, okay, use the 8 and the 15 and use the exponential and use this and use that. You know what? Go do it. Or here's something else better. Go search the internet for the moving average crossovers that make money, right? Because look at the comments you get. This is a combination of all the brains on the internet telling you how to trade, right? Here's the crossover, blah, blah, blah. A potential change in trend, right? But nowhere are you going to find the answer to the question, well, which time frame should I be on, or for whatever time frame I'm trading, which moving average should I use that work? Because what you're going to find is, well, you know, at different times, at different accelerating stocks and different environments, the different moving averages may be your answer. Okay, well, again, what good is this? It's none. Now, I'm talking to 3 groups of people. I'm talking right now, I mean for you that are out there. I'm talking to some people who are probably new enough that they think these type of things are still valid concepts. That's the lower, newer group, and maybe you just believe me that this is complete crap. There's a group of you that are way beyond this in your board because you're, Paul, I know all this, and you told me similar things 100 times. But there's a group in the middle that you kind of agree that, yeah, okay, well, yeah, I see it's not going to work, but yet you continue to do things like this every day. Next. Bottoming tails and topping tails. A bottoming tail, and boy, you'll find this all over. A bottoming tail is a bullish signal. A topping tail is bearish. Here, do you love this line here? Is this the greatest line in trading? A bottoming tail must occur at the lows of the chart. Let me tell you how to make money. Every day, go long by buying the lowest bar on the chart. There you go. We're done here. That's all you need to know. These are the asinine comments that you get. This is investing.com. So I mean, I'm just kind of picking the top. Yeah, isn't that hilarious? Yeah. Bottoming tails work as long as you go along the bottoming tail that's at the low of the chart. Hey, that's what I've been doing wrong, Eric. I've been going along bottoming tails at the top of the chart. Darn it. And it must be substantial, not barely seen by the A, blah, 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 blah. This is a common one. I have a couple of, and forgive me, this is a slide actually out of the seminar program, and I may have shown this slide also to platinum people the other day. Green bar, topping tail. Comments from people, and if you're like a seminar platinum person, don't comment right now. Let everybody else do it. What does this mean? Give me some comments. Your knowledge, technology. I know we'd like to see other times, like to see other charts, but just in a vacuum, big green bar, topping tail. What does that mean? If you had to bet what was coming next, what do you think is coming next? Is this a bearish setup at this point? Is it we expect to go lower? Is it bullish? Do we expect to go higher? What do we expect? Roy says topping tails are bullish, but Roy, you would be going very much against investing.com, who says that a topping tail is bearish. That's a big topping tail. It's supposed to be a fairly big bar. Impressive, Nathan. what I'm going to show you, just a shortcut version here off to the right, is I'm going to show you another chart. Yes, exactly, Eric. Yeah. Good question to ask. Is that the high of the day? If that's the high of the day, that's a good topping to a short. Picture on the right, obviously 100% bullish, right? A beautiful, beautiful uptrend. I just want to point out to you and make a big point out of this actually, that the chart on the left is the chart on the right. 5 bars equal 1 bar. So this is a daily chart and this is the weekly chart, or this is a 1 minute chart and this is a 5 minute chart, doesn't matter. And all I want to show you is the most bullish pattern in the world. If we just decide to suddenly stop the picture right here, right? This little chart's going 1, 2, 3, 4, 5. 5 days go by, and the weekly chart says, "Thank you, daily chart. You made me look really good this week." And the daily chart goes 1, 2, 3, 4, 5, and the weekly chart goes, "Thank you, daily chart. You made me look really good this week." Then the daily chart goes 1, 2, 3, 4, 5, and the weekly chart goes, "No, don't do that." Now they're taking a picture of me with a topping tail, and it's really embarrassing because it looks bearish, and there's nothing bearish out here. This is the attempt to use cookie cutter names, cookie cutter patterns, dumb things down where poor innocent new traders think they can learn to trade. Bottoming tails, topping tails, blah, 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 blah. I did one more here on this one because this one I think is also a good one. You are looking at this pattern and you see a pullback coming. And let's say that this pattern was some kind of uptrend. So you decide to go along this pullback and you go along right in there somewhere. And you're going to try to get it up to here because you're in an uptrend, right? So you go along in here and you're sitting there having a beer, watching Housewives of New York. And all of a sudden you look over and you see a red bar. You know, it's green bar. Every time you glance at the chart, it's a day trader. You're green bar, green bar, green bar. And then you look over one time, you go, red bar, what's going on? And you look over and you see a topping tail. My question to you, very simply, are you happy or sad that that's a topping tail? H or S. Are you happy or sad that that's a topping tail? And this is an absolute, definite, 100% answer. Are you happy or sad that that's a topping tail? Yeah, you guys answering, you're all, knowledgeable people, been to a few of these. And the people who want to say sad are afraid to say it because they know from the tone of this presentation and where I've been going that that's not going to be the answer. And you're right, you're very happy. Because if you're buying a pullback in an uptrend, how many times will you encounter the prior high? And the answer is 100% of the time. You can't avoid that. If you're trying to go to a new high in an uptrend and you buy a pullback, so the question only becomes, what do you want to see here? And without getting too much into detail, what you want to see is what we call just a single pivot high, just a run up and a pullback. That's exactly what you want to see to make this the most likely chart to get through here, that prior high. It's just what you want to see. Where everybody says, hey, you know what? I'm making a lot of money on the way up. Do you mind if I take some profit? Everybody says, no, go ahead, sir, ma'am, take some profit. Go ahead, ma'am, sir, go, 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 go. Anybody else? Yeah, I want to get a little, okay, fine. All right, everybody done? All right, let's take it higher again. That's what you want to see. So, and what's of course amazing is, and when I show you a slide like this, I'm not cherry picking stuff. Go Google it. Please go look for yourself. Bottom, and there are some that are crazy, but they weren't like the top sites, so I didn't go there. But there are some like bottoming tails are an absolute reversal. You go long whenever you see a bottoming tail. I don't think so, but it sure is simple though. Isn't that easy to learn if you do that? Here's another example. Here is today. Here's today. There's a bottoming tail by anyone's definition. Let's go long, and you know it's going to happen, right? It's not going to work. But there is a real bottoming tail, right? That one certainly has to work. We got to be near bottom. We're like 12 bars down, 15 bars down, huge bottoming tail, biggest bar on the chart, and it's a bottoming tail. And not even close, not even close to the bottom. How do you tell the difference? Well, anybody, just 101 in chart reading, tells you to examine a bottoming tail. That 2-minute chart there from today looks like that on the 1-minute chart. You show me where the bottoming tail is, I'm sure you could pick it out. But you can see that even a 1-minute downtrend never ended, let alone anything else. And even a 1-minute downtrend ending is not any reason to go long necessarily. So complete and utter nonsense. One more. Well, 2 more. Now, here we're getting to a little different topic because this is the doji. This is the doji. What does a doji candlestick indicate? Since the opening and closing prices are similar or the same, a doji indicates a period of indecision in the market when the price opened at a particular point, traveled to different highs and lows, and then closed at the same point. That seems to make sense to me. We open and close at the same point. Indecision. Okay. What does the doji mean in a downtrend? In a downtrend, if a doji forms in a period downtrend, it could suggest a potential bottom or reversal. Notice that it wasn't on the site. It doesn't say what does the doji mean in an uptrend, because nobody would short. People only go long, so we're only looking for long entry. So it's a potential bottom or reversal as sellers are running out of steam and buyers are preparing to enter the market. Wow, they're preparing. You like this wording? People that write technical analysis on the internet should run for office. This is great, right? They're preparing to enter the market. They're not entering, they're preparing. So somehow prices bounce just on the notion that they're preparing. Somehow when I said I'm preparing, the market rallied knowing I was preparing to enter the market. But again, traders often wait for the next candlestick for confirmation. Of course, what would confirmation be? Nobody says. And what if the next candlestick doesn't give you confirmation? What do we think of the doji? There's what the internet says. Give me your comments while I get something to drink here. What does a doji mean? Is it a reversal? Is it like a bottoming tail, topping tail type of reversal? Is it indecision? Of course, when you say indecision, what would that mean? Well, that's why you're from Southern California, Mike, because everything's meaningless to you. Context dependent. Well, let me just drill down and show you just how silly this concept is. I always like picking on the doji because I kind of make fun of the cool kid table in trading, where you get to the cool newbies and they always have these terms they want to throw around, like the VWAP. That's a favorite one, and the doji is one of the favorites. Oh, that's a doji. Or then of course it's not enough that a doji means absolutely nothing. We'll get to in a second. But now you see all the other names. There's the deadly doji and the gravestone doji, and if you go look them up, there's like 75 dojis, and of course you're just giving 75 names to the same meaningless candlestick, so it's all just completely irrelevant. Bullish or bearish? Hey, Leo. Flip a coin and go all in. Bullish or bearish? That's not even a real question. It's bullish, right? Where would you expect this to continue to? You'd expect this to continue. Let me answer this one because it's not a trick question. Higher, right? All right, to the moon. All right, well, let me show you something. Let's say you can pick whatever time frame you want that gray line to be. I don't care. Pick your time frame. If I were to go to the bigger time frame, so let's say this is the daily chart. Bam, bam, bam. If I were to go to the weekly chart, and this happened to be 5 days, 1, 2, 3, 4, 5, and there is my weekly chart. Or if this was an hourly chart, I'm sorry, if this were a 5-minute chart, and I began and ended, you see what I'm saying? In other words, those vertical lines are where the higher time frame is starting and stopping. If this is where I started and that's where I stop, well, what pattern would I get on that higher time frame? Because somebody figured it's like a puzzle. Can somebody figure that out? It doesn't matter what time frame it is. This could be a 5-minute chart if you like to scalp. And then this is the 15, or this could be a 1-minute chart and this is the 5. If this is a smaller time frame, and boom, boom, I close and I start and stop the bigger bar here for the higher time frame, what pattern am I going to have? Do you see it though? Yes, that's how you get a doji. There's a doji. There's a doji. This here, do you all see that? I mean, if not, I'm not sure I can make it any clearer. That gives you that. But at whatever time frames you're on, it doesn't matter. I could have found a chart with time frames, but I just did it this way, right? That is what you get because the candle started here, it went that high, it went that low, and it closed here. Is there anything indecisive about that? Is there anything reversal-ish about that? And what just amazes me is that these are hugely popular, well-read sites where traders go for information. And this is one of these. What was my comment? Here's my comment. I'm glad I wrote it down. I wouldn't have thought of it. There's something about trading because it seems easy. And the desire to make money in an easier way, you know what happens? People throw out common sense. They simply throw out common. People that I talk to that are just so smart, obviously, right? They're so smart in what they do, and they made tons of money, and they did this and they did that, and then they come and they say, "Oh, I shorted that because it's a doji." In the desire to make money, they throw out common sense. They think that trading can be reduced to a couple of names, a couple of emblems, a couple of cookie cutter patterns, wham, bam, bam, and it's not. And that's why, and if you're starting to say, well, okay, well, gee, if you're not going to learn cookie cutter patterns, what do? You learn how to read a chart. I call it the language of charts. And that's where you start to understand stuff like this, that that combining different concepts and understanding that a bottoming tail means nothing, that a doji means nothing, nothing, nothing. I've never used the term doji other than to mock it and to make fun of it. And yet, look up any technical analysis book. It's one of the favorite terms out there. Here's another one, then I want to talk to you guys for a minute. How do you backtest strategies to make money? Well, backtesting is the general method for seeing how well a strategy or model would have done after the fact. Okay, I agree with that. It assesses the viability of a trading strategy by discovering how it would play out using historical data. If backtesting works, traders and analysis may have confidence to employ it going forward. Investopedia, this one is. Look at the language here, right? Look at the language. Now, this is one of these that's I know some people sometimes fight me on. Backtesting strategies is completely 100% worthless in terms of finding a viable strategy going forward. Now, you may backtest to learn about technical analysis. That's fine. Yeah, yeah. I mean, it's true. And here's the thing. I always say to you guys, thanks, Adam. I always say to you guys, you know, I can give you my opinion, and you should respect that because I've been doing this forever and teaching people forever. I think teaching people forever is maybe the bigger part of it because that's when you learn to explain to people, hey, what I'm doing now. A lot of good traders couldn't form these words that I'm forming because until you have to explain it to people, oftentimes you don't think through. So I've said many times that there are sometimes strategies and concepts that I can do and I've done for many months before I could teach them, going way back, because it's hard to take a concept and get all the elements out in front of somebody, right? Let me read your comments first here. Backtesting. There's more indicator scams. Yeah, right. Right. Yeah, thanks, Mike. But what I want to say, Mike, is this, is that yes, you should respect my opinion, and some of you may not. You don't like me or whatever you think, that's fine. But again, I want to prove this to you. You know how I can prove this to you? You know how I can prove this to you? Go show me your back-tested strategy that makes money, right? Go Google it. Go, here, Investopedia, you're saying that people, if you if you get a good historic back test, you might have the confidence to employ it going forward. All right, show me one. Show me one. Show me anything anybody ever created that they're using to trade with going forward. And you know what you're going to get when you talk to these people, the back testing experts, what you're going to get is, oh, well, yeah, well, we had to go and change that because, well, something changed. Like it's Wednesday, not Tuesday anymore. That's what changed. I met a guy who months back said he'd been making a ton of money, FX using mean reversion. Then August 5th happened, and I wonder he might have got blown over. Well, sometimes they put fancy names on things. I mean, the mean reversion is kind of a common sense. Yeah, I mean, it's true, right? I mean, things don't go vertical or horizontal. Things don't go vertical, up or down the majority of the time. Most of the time there is mean reversion, but you still have to know how to trade that. I mean, it's not as simple as saying, well, things kind of coagulate a good part of the time. Thank you for the comment. I'm part of the college instructor series. Right, Adam, thank you. Yeah, I mean, I back before trading, I used to manage people, but it's not really teaching. teaching is probably the final pinnacle in learning yourself in a certain degree, you know. Like in martial arts, getting a black belt's not really a big deal. Second, third, fourth degrees are big deals. And a lot of that involves because you're teaching at that level. And that's what really a lot of it is. But anyways, so I stopped here because I think you get the idea that this is not an area that you're ever going to learn much from. And I wanted to just take a moment. I don't know how to proceed from here because I have thoughts in my head I don't think I want to say, but maybe I should. I had specifically think because I'm kind of talking to two people by email, somebody from over the weekend and somebody from just Monday. And don't volunteer if it happens to be you, if you're here, whatever. And in them talking to me, I'm hearing these words that make me quiver, you know, um, words that I just know for a fact that you're on a failing path. And it's tough for me, because if I project that properly to them, which I do because I'm honest, I have to say it, I don't come across right because it's like, oh, okay, well, yeah, you're just saying I'm never going to learn, blah, blah, blah. But I want to go back to what I told you guys. It's getting close to a year ago now. I always and still do have offered to help people, even if they're not subscribed to anything, not a seminar student, just to help them because I want to, as much as I can, keep them safe, set them straight, help them if they can. And I honestly thought, and I said, if you go back before a year from now, you'll probably hear me in some presentations maybe say that, hey, if you want to learn on your own, I think it's the very difficult way to do it. I tried it myself when I started, and I found that it was a smarter thing to get a jump on it by learning some things. And back when I learned, there wasn't much to learn. So I have always offered to help people, and many people took me up on that. And they were very kind. Like they didn't take up a lot of my time, but they kept sending me stuff and commenting on it, blah, blah, blah. And after, well, years of having some people doing this, um, there were a handful. I said, man, I think this person's going to make it. They're asking really good questions and blah, blah, blah. And, you don't hear from people after a while. And I had everybody that was in that category. I had them in a folder in my email. I sent out kind of a group email, not personal, but just saying, hey, how are things going? 0 people made it. 0, 0 people, 0. Yeah, but that was shocking to me. I go back and read somebody's comment here. But that was shocking to me. You know how shocking that was to me? Because I always thought, okay, there's 3, 4, 5% of the people that'll make it if they're really smart, really diligent, try to accumulate all this stuff. But even then, to me, it's still kind of a dumb thing to do when you could get help and get structure and build on that structure. See, what you have to do is even when you learn how to trade, you still have to learn how to trade, right, Mike from SoCal? Is that a true statement? Even when you learn how to trade, the next step then is to learn how to trade. And what I mean by that is kind of building on what you've known and make it your own, and and finding out that not everything that you thought you knew properly. So there's a learning curve even for somebody who I would consider to be an A+ student coming out of one of my classes, right? True? People that trade? Isn't that true? I mean, there's still some of a learning curve. And to start at the bottom without any structure whatsoever, to me, is just, I've proven it to be an impossible thing. What was the comment up here? These things may work for some people in the sense that it helps them access deeper intuition, whether they know it or not. Well, Nathan, the way you phrase that, I'm not sure. When you say these things, if you mean internet concepts, all I could agree with is that perhaps people get beat up enough that they get mad and say this is all crap, and that's what happens to some people, But the question is, along the way, on that difficult learning curve, do you survive, right? And not just financially, because I know one answer is, okay, I'm just going to risk very small amounts of money, and that's what you absolutely should do. You actually start off on paper and then very small amounts of money. But there's another thing that you have to survive. You know what that is? You have to survive your belief that technical analysis works. Because when you learn all crap and then you just keep trial and error throwing out the crap and just trying to correct the things you did wrong when you don't know what's right, you get in this bottomless pit where you look up and you say, you know what? I don't think this stuff works. Someone might use Bollinger Bands and do well, but it's not the bands, it's the way the bands connect them subconsciously to the market. I agree, but I want to phrase my agreement properly. I put 3 moving averages on my charts, Nathan, but they are not there for any reason that 99% of the technical traders would say they should be there for. They're not there for support. They're not there for resistance. They're not there because they're entries. They're not there because I care when they cross. They're there as a visual guide to me to help understand trends better. And what I do say is that you should not have technical indicators in your chart, never for the purpose of entering something. But if you have one, like a moving average, that gives you insight into the technical patterns to some degree, that's okay. And if Bollinger Bands are things that do that, that's fine. But just make it clear, you never enter a trade because of what a Bollinger Band says. Now, maybe when you see you're near the upper part of a Bollinger Band, it prevents you from going long. Congratulations, that band helped you because it visually showed you something you should have known anyhow, probably, right? But they're not entry or exit concepts. And thanks, Dave, for the comments. Ninja Trader playback, right. Right, exactly. And that's what I meant, Mike, when I said that if you're going back and backtesting strategy, you may learn some stuff about technical analysis. Like if you even you know Ninja Trader, many platforms, like even TradeStation, even though I don't remember how to do it, one of you showed me, you can actually link the charts together and go back in time and they'll all move together. Yeah. Well, that's true, Nathan. It's exactly what I say. Any indicator, as long as you never use an indicator to enter a trade. Agreed? Never, 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 ever. Guaranteed there's no indicator will ever work, right? Exactly, right. Yeah, but if you have one on your chart, and I phrase this way, Nathan, either as a negator, meaning that you've had trouble waiting for pullbacks. So you decide to put a CCI on your screen and you are not going to go long unless it's CCI. So it's kind of a last minute check for you. I'm okay with that because there's a negator. It's not telling you to take a trade, it's telling you not to take a trade. If you're going to say not to take a trade, I don't care if you use my next door neighbor's cat is in the front yard negator. I don't care. And then as some kind of the way I look at a moving average to explain it is that, let me draw in here a minute. I'm not going to ask you again about angle of ascent, but it's the same issue on here, right? If you have different charts or if they're skewed differently or this or this or this, you know, I could have one chart pattern that looks like this and one that looks like this, and is either one of those extended? And the answer is I don't know, right? I don't know. But what moving the average does for me is say, oh, you know what? The one on the bottom is extended. Doesn't look like it, but it is. It's just the way I have it skewed and compressed. And, you know, like if you have a 200 period moving average on your chart, maybe the 200's here, and it's compressing the chart, you know. So to me, the moving averages just bring things into perspective, like you're in the desert and blah, 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 blah. Mike, I believe you can. In other words, if you link, and again, somebody showed me how to do this. I did it, and then I lost it. I never did it again. But I understand on TradeStation, you can lock you can lock like 3 or 4 charts together. And then if you scroll the daily back 3 months, all the other time frames will go with it. And then as you click through, they will advance. Yeah, there's a way to do that. So I assume other platforms have it too. And I know, yeah, like on Ninja, you have that cool feature. I've never used it, but yeah. Right, it's not backtesting. Well, I always say when seminar students are done, I say one of the first things to do after the first class only is just, you don't need to sit there live in the market. Just scroll your charts back at night, go back a month ago, go to all these charts and just start asking yourself the questions. You know, all the things you learned in seminar class. What would you be doing? What would you do? Remember that 97% of the charts you look at are going to be meaningless. So you wouldn't be doing anything. But look for that 3% and go through and scroll. And so it's the same thing, right? Going through and just going back in time and seeing what develops is to teach yourself, so to speak. Exactly. I have a final comment, and this is so much, please understand, this is so much in the vein of helping people, okay? And I have a comment for it. I wrote a comment I am going to say after this. If you study, this is a summary for this today. If you study the internet full-time to learn all you can about making money in the market, and if you are a smart person and you synthesize everything you learn and memorize it and apply it, do you know what line comes next there? Anybody? If you're a smart person and you read everything, not realistic, and you synthesize it all properly, in other words, you pull the best of the internet out of the internet and you're a smart person, you apply, what's going to happen to your trading? What comes next? You will lose money hand over fist. I want everybody to understand that. It's just an absolute proven fact. It just simply is. This is one of the most dangerous areas to me in that it attracts so many people. I mean, we're talking about the market. We're talking about billions of dollars every day, Forex stocks, tons and tons of money changing hands all over the place. A smaller amount of people make most of the money from the bigger group of people. And it's just something that draws people to us because it just seems so easy, right? All you have to, like we learned today from the internet. I learned a great tip today. All you have to do is buy the bottom bar of the chart that day, and you make money. I didn't realize that. I mean, but that's what people think, and that's what happens to them. So I have a new rule, because I'm literally. This may sound funny to you. It's nothing to do with the DTS business. Just me as a person, as a trainer, trying to help people. I'm getting sick of something. I'm just getting sick of people who say, "Oh yeah, I'm kind of new. I'm looking around, but I'm getting my feet wet. I'm getting the hang of this. And you know what? I'll get back to you in a few weeks and see if I need some help." And when I check in with them, it's, "Oh yeah, I'm a greeter at Walmart. I got to save some money again to get my account back because I tried this new double helix maneuver strategy and it worked for a few days and then I really lost a lot of money." I'm getting sick of hearing that. So here, I have a new rule for everybody. Here's a new rule, and it's going to be enforced 100% to all of you. If you are, this is only for people not in my seminar program. If you're in my seminar program, that doesn't apply. If you're not in my seminar program, if you are green right now, if you're making money, let's say every month, whatever it is, if you're green and you're happy, fine, that's great. If you're not green, here's your new rule. You paper trade until you make 5 risk units on paper net. And you can start over every 30 trades. If you dig yourself in a hole, wipe the sub, clean it for 30 trades and start over again. Make it 20 if you want to, 20 trades. And you keep doing that until you make 5 risk units, right? So if you're risking 50 cents day trading, $2, whatever it is, when you make 5 times what you risk, then you advance to something. And before you advance to something, you send me the trades. I'm assuming you're not part of Summit or you're nobody I even know. You do not risk real money until you show me that you can paper trade, all right? And I'm going to enforce that like I obviously have no way to enforce that, but you get my point. I want you to send me the trades and prove to me that even though you cheated and lied and stole, that you made money on paper. Prove to me you can do that, all right? And that'll be at least a great first start for you. If you get in a hole, 20 trades, start over, and then you got to make 5 risk units, all right? I even put bot strategies and trade FX almost a year, walking up ungodly. Yeah. Well, of course. I mean, Jag, when you think about it, it's probably obvious to you now, but how could bot strategies possibly work? For anybody who likes that idea, what Jag just said, let me invite you to something. I'm going to have a poker game this Friday, and the first 7 of you want to come, I'll invite. And it's going to be great. You know why? Because I got this great new poker game, and we all are going to be winners. We're all winners. But it's kind of what that is like, right? You know, going back over the years, right? Program trading. Oh my gosh, Paul is going to ruin the market. Blah blah blah. The machines, right? Gonna ruin the market. Dark pools. Paul's going to ruin the market. Oh no. Bots. Paul going to ruin the market. IA. Paul going to ruin the market. You know what? Here's the great thing. Yeah, high frequency HFTs, high frequency trading machine, going to ruin the market. Here's the great thing, guys. I don't care. None of it matters. You just don't get the beauty of this sometimes. Here's a chart. There is, it goes down here and bam, it blows through here. I don't care what made that happen. I don't care if it was Goldman Sachs selling shares. I don't care if Mike from Southern California sold his 3 million shares. I don't care if it was a bot, if it was whatever. None of it matters. Because there will be a reaction to that event, and it's the reaction to that event that you're learned as a technical trader to react to. And you get very high odds. And no, we're not right all the time. But it doesn't, do you see what I mean? None of this, it only matters to people who lose all the time, and they want to blame something, right? I can't tell you how many people blame the machines and blame the high frequency machines and blah, blah. Oh, the market maker took my stop. If you ever say that, just go to Vegas and take your whole bank account and put it on red and hope you do well. Did I miss any comments here, Adam? I missed a couple of comments up here. Let me just get your comments and we'll call it. If you have any other questions, let me know. Bots, Adam, there are a lot of experts hounding me, guaranteeing me their bots will make me rich. Thanks, Adam. I like comments like that because you obviously are past that. But there's probably, Adam, 20% of the people here that are still in that category. It just comes back to the school of common sense. It just comes back to the school of common sense. Technical analysis, my term for it is the language of charts. It's just learning how to read a chart. I sometimes will take a trade because I know it's going to go higher. And you know what? I don't even have a name for it. My name is, I know it's going higher because I know charts, right? Now, a lot of things when I teach, obviously we attach names to things, not patterns. We don't have cookie cutter patterns per se, but we learn all the things about how to read a chart. And that's what matters. I mean, it's just all these things you get. It drives me crazy in this business because it is just so scammy. It really is. And you get these emails, oh, the new strategies to learn in 2024. What did you learn in 2023 or 2022? What do you mean the new strategies? There are no new strategies. You learn how to read a chart, that's your strategy. There is no new strategy. What does that even mean, a new strategy? So you taught me stuff last year and now I have to pay you to learn the new ones for this year? All this insane stuff. Your bots are going to make money. Well, how come you have the right bots? So what about the other guy? How come his bots aren't making money? All the bots can't make money, right? That's what I meant by the poker game. All the bots can't make money. When you get to see some of the one thing that people say, well, they say a lot of things, but one of the things that is so consistent that people are blown away with is when they learn technical analysis, the common thing they always say is, I had no idea there's so much to learn. And it puts, tonight's good closing comment for tonight's topic, learning from the internet. No, not going to happen. It's kind of like, go long when you see the lowest bar of the day. It's exactly right. It's about odds. The big thing is, Jag, for people, thanks for the conversation, but a big thing for a lot of people is knowing the odds. A lot of people, what they say they know the odds, it's based on just subjective, gut or whatever. Or it's based on, sometimes it's based on a concept that works for a short period of time, like a concept, go long no matter what. Okay, there's some periods of time that'll work, right? Anytime the market drops, just buy it, and then those people lose their entire account, and not because they're careless. Because I want you to listen to this comment. For some people, the way they trade, I want you to listen carefully to this comment because I've had this argument with people, right? They make a little money, make some money. I had a presentation that's kind of about this recently. And then they have a really huge loss. What do they say? Help me out here. Made some money. It doesn't really matter if you're, scalping and you made small amounts and you lost a fairly big amount, or if you're making big amounts and you lose a huge amount, but you lose this big amount of money. What do they say every time, right? They're talking to me and they're telling me they're a good trader and they blah, 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 blah. And I look at their trading style, right? Yeah. Well, their point always is, Adam, is that, okay, that was a mistake. That was a blunder. All I have to do is keep doing what I'm doing and don't do that blunder. But what they don't understand that their trading style only makes money by virtue of the fact that that blunder will occur. Like an example of that is averaging down, right? Okay, 12 trades work. They were terrible trades. You threw more money at losing trades. You were down a bunch of money and they came back for you, made a little money. And then one time it didn't work. The only reason you had that terrible trade was because your style put all the trades in jeopardy. 9 worked, 1 didn't. It's not because you were careless, it's because your style necessitates having a huge loss. Does that make sense, everybody? It may or may not to you, but. All right, everybody, hope you enjoyed tonight. Have a great evening. It's Wednesday, and there won't be anything going on then until I'll probably do that event maybe Tuesday next week or something, right? So we'll see you then. Have a great night. As always, if you have any questions, feel free to email me. We'll see you guys trading. We'll see you in the morning. Have a great one.